people think the property market is going to crash. However, based on a 18-year cycle that's been going on for the last 200 years, chances are we've still got a bit of growing before the property market does cool off. My name's Anthony from Bulk Mortgages, and if you want to find out more details about the property market and the mortgage industry, make sure you press like and subscribe to stay tuned. So what's the 18-year property cycle? The 18-year property cycle is a metric that's been going on for the last 200 years, and the theory is that every 18 years roughly, the property market resets itself and starts again the next 18-year cycle. So first of all, we need to look at what causes the property prices to increase massively. It is all down to a supply and demand issue. As the demand for property and land increase, businesses want to expand, they want to grow their premises, people want to move to bigger and better properties, and the sheer fact that there's too many people wanting to buy a property and not enough property on the market tends to send the property prices skyrocketing. However, as the house prices rise along with the demand, it gets to a point where the land and property prices now become unaffordable, and this causes a decline and potentially a price dip. So as the house prices increase and become more and more expensive, a lot of people now see property as a perfect investment. You hear everybody and their nan putting money into properties and earning fortunes from it. The banks then catch on with the trend and that the property prices are increasing dramatically. And because of this, they relax their belts when it comes down to lending, and people can tend to get a little bit more borrowing for themselves. At this point, lending becomes freely available for people, more people are buying properties, and the prices go skyrocketing. After that, property prices again become unsustainable, banks have over-leveraged themselves, and there is then a potential crash. So this particular cycle is predictable. It's gone on for the last 200 years, and although it's the 18-year property cycle, sometimes it can be shorter than 18 years, and sometimes it can be slightly more. Let's take a deeper look at the property cycle and each stage and how it works. So year 1 to 7 of the property cycle is ultimately the recovery phase. What they're recovering from is the previous crash that ended the previous cycle. At this point, property prices do increase, but they increase at a very slow and gradual rate. Almost always, towards the end of this cycle, there is a dip, or what they call the mid-cycle wobble, where you have a few years where the property prices will not go up, not go down, they'll kind of stay level as to where they are at the moment. This following stage, and after that dip, is followed by an explosive growth stage, where there's in the region of about 7 years of aggressive growth in the property market. And don't get me wrong, it's not every single year you have growth after growth. There'll still be slight pullbacks and corrections, but as a whole, over the next 7 years, there is an extremely aggressive growth in the property market. This is then unfortunately followed by a recession stage, where again, the banks have over-leveraged, people have borrowed too much from the banks, they can't afford their mortgage payments anymore, and property prices are through the roof. At that point, we tend to have a massive crash, and then we go into a recession where there's no growth and the property markets dip year upon year, which usually lasts in the region of about 4 years. Once property prices take their massive tumble, prices tend to stay stagnant for the rest of the cycle until the new cycle starts and the growth stage begins again. Although in this graph, you may realise that the baseline for the next cycle always starts off higher than the previous cycle, which means if you're holding property in the long term, based on this particular 18-year property cycle, prices tend to increase over the long term. My name's Anthony from Bulk Mortgages, and if you want to find out more details about the house buying process, don't forget to press like and subscribe.